last year, Chatham had the most new home builds, I believe, that they've ever had in their existence. So that's good. In terms of jobs, you've got your typical, police, hospital. There's a really big hospital in Chatham.
Welcome to the Golden Nuggets of Real Estate Investing, a podcast dedicated to helping you achieve financial freedom through real estate. We'll be discussing the most important lessons, or better known as the Golden Nuggets of Real Estate Investing, entrepreneurship, and personal finance with new and experienced investors to help you get into real estate investing or scale up your portfolio. So make sure to tune in. What's going on, everyone? It's Ross Nadai. I'm a real estate agent, an investor, and host of the Real Estate Golden Nuggets podcast. I have an amazing episode full of golden nuggets for you. I had the pleasure of sitting with Jeremy Ivany, a real estate investor investing in Chatham. If you want to learn about the Chatham market, how Jeremy and Taylor have been able to scale up to 34 doors in less than 2 years, then you definitely don't want to miss this episode. If you like this podcast and gotten any value out of it, please share this far and wide to reach as many people as possible. If you are listening on Apple Podcasts, please leave me a 5-star review. If you're watching on YouTube, leave me a comment, like, subscribe, and hit the notification bell so that you can stay up to date on the most recent episodes. Thank you so much for your support. Please enjoy episode 9 with Jeremy. What's going on, everyone? It's Ross Nadai, host of the Golden Nuggets podcast. Today, my special guest is Jeremy. Jeremy is a real estate investor out of Chatham, Ontario, and he's quite a serial entrepreneur. And the reason why I'm saying that is because at a very young age, he has been able to scale up quite significantly and very successfully. So very excited to have him on the show today so we can get a lot of golden nuggets out of it. Without further ado, Jeremy, why don't you tell us a little bit about yourself and how you got started real estate investing and maybe a little bit overview of your current portfolio?
Yeah, for sure. So yeah, like you said, I'm Jeremy Ivany, and Taylor and myself, we got investing in real estate just over a year and a half ago. And to date, we've scaled up to about 14 properties and 34 rental units. It's something that I do day to day full time now. And it's something I'm really passionate about. So yeah, I mean, that's really where we're at this point.
Out of all the other investment opportunities in the world, why real estate? What made you decide to go in real estate?
Yeah, for sure. No, fair question. So the reason I got interested in real estate was when I was 18 years old, I moved out west for a couple months. And the guy that I was living with was a serial real estate entrepreneur. He was 21 years old at the time. He owned 6 rental properties and he rented them out to everybody that worked in the oil fields. And he was making a killing at it. And him and I had lengthy conversations about why real estate was so powerful. He was making all this money off of us. We were paying $800 a month to live in a room in one of his houses. And there was, 6 to 8 bedrooms in each of these houses. So I couldn't help but realize, like, wow, this guy's making a lot of money, month over month. And I just saw it as a way where it's like, okay, look, we can work for a living and then we can purchase real estate assets. And those real estate assets can end up actually paying for our lifestyle. So I was like, this is like a light bulb moment, right? A lot of people just go day to day for, 20, 30, 40 years. They work their day jobs, they spend what they earn, and that's it. But for me, I thought, no, okay, I'm already tired of, getting up at 6 a.m. in the morning for somebody else. There needs to be some sort of change. So that was really the big light bulb moment for me, was like, I need to figure out ways where I can make passive income while I'm not working, right? I always wanted to travel. I want to spend time with my friends, my family. And, when you get caught up in your 9-to-5 day job, it's really hard to do that.
No, absolutely. Absolutely. Wow. So you made that realization at 18. That's amazing. A lot of us figure that out later in life. So 18 is a phenomenal number. And also I think one of the other reasons that I think the biggest influence on you was because your parents are in the construction industry as well, right? Is that correct?
Exactly. Yeah. So, they weren't an influence on me to get into real estate, but they always pushed me to do better. A little bit of a background of what we do. So a lot of the properties that we're buying are, they're major fixer-uppers, right? We're jacking up houses. We're doing all that sort of stuff. A lot of things that a lot of investors don't want to get involved in. And what that looks like on site is, me and my parents working together, right? We're fixing up all these properties. So that was really nice, satisfying for me to think, hey, look, I'm giving my parents an opportunity to make money, as well as myself. So we're kind of just growing together in a sense. And that's really been inspiring for me.
Yeah, absolutely. That sounds amazing. Like you were touching on, spending time with family. What better way to spend time with family than, work on the same projects and make money, right?
Exactly. Yeah.
Tell me a little bit about, how I guess you and I believe it's your girlfriend, right? Taylor,
Yeah.
were able
Yeah.
to partner up and get into this, because there's one thing somebody believes in a passion and something to work towards, and then there's another where someone needs to be a little bit convinced. So tell me a little bit how you guys kind of started that route together as partnership.
Yeah, for sure. So really how this all got started was there was a point in my life where somebody in my family got really sick. And I thought, we were all in the hospital together and we were all kind of sitting in the room together. And I really sort of started to realize, like, wow, life isn't about like all of like this hustle. And I was never one to really like to get stressed out. And, even at my day job, somebody who really cared about the employer that they worked for, I always felt stressed. And I always felt like there was something better to do, or something more fulfilling that I can do in my life. So that's why I got into real estate. I thought I always wanted to be some sort of entrepreneur, but I really didn't know what I wanted to do. And then real estate kind of flashed back to me, right? Because like I said, when I was 18, I met this guy who was a real estate entrepreneur. And this was back when I was about 21 years old. So yeah, I quickly started, listening to Bigger Pockets podcasts. And then, I mean, that's kind of like the rabbit hole, right? A lot of us, we listen to Bigger Pockets podcasts and it's like, wow, this makes so much sense. Why didn't we think about this earlier? But then it was hard for me to get Taylor on board. It took a couple months. There was times when we would just lay in bed and I would just listen to Bigger Pockets podcast, and Taylor would be like, all right, let's turn this off. Like, we've heard enough of this. And I'm like, no, you must listen to this more. You must get on board. So what really was the light bulb moment for Taylor was we purchased a residential property in London, Ontario, which was our primary residence. We ended up doing a lot of work to it. And then we ended up refinancing it. And then we got this big check at the end of the day. And then she realized, wow, this is powerful. We just made more money with this one check than we made, all of last year. Is our time really valued trading at a day job, like a 9-to-5 job where we're getting paid hourly? Or is it better spent on a business like real estate where, we can really make a lot more money and do a lot more good? So
yeah, no, that's phenomenal. And that's, it's so important to have, both partners on the same page, whether it's, your parents or whoever, maybe your girlfriend, your significant other. The reason why I'm saying that is because I kind of relate to that as well, right? Starting off, you seem like a crazy person. You're thinking, oh, I can do this, right? But then when you actually speak volumes, and if you show, the reasoning behind it, the numbers, and then when somebody sees it, they're like, oh my God, like, why are other people not doing this, right? It's just almost that question comes up, like, how come nobody saw this? Like, I wish I knew this earlier, right? We tend to always think back and look at it in that sense. So basically, to just recap what you said here, Jeremy. So you started in London, Ontario, with your primary residence. So take us basically onto our next steps. Like, what happened from there, and how did you guys start getting into the multis?
Our whole idea was, when we first started out with investing in real estate, we thought, okay, there's going to be a point where we run out of money. And when we run out of money, the next option is we have to use joint ventures. Okay, well, we're also really young entrepreneurs. So it's going to be hard to attract good joint ventures, right? We're 22, 23 years old. It's kind of hard to entice somebody to, put up $150,000 as a down payment in renovations and trust us with 50% of the equity. So our idea was, okay, let's try and scale up our real estate portfolio quickly, and then people are going to trust us more, right? People trust the guy that's bought in 10 properties in his first year of real estate investing than the guy that's bought 10 real estate properties in his first 10 years of investing, right? It just, it's the scalability that gives people trust. So that was our idea, was like, let's scale up really quickly, and then let's start attracting joint venture partnerships, which is exactly what happened. But the issue that we ran into is we didn't have $1 million sitting in our bank account, right? We had to utilize the BRRRR strategy. When we actually started buying investment properties, we only had $80,000. which doesn't go far. I mean, after your first rental property with the down payment and the renovation, that money's gone. So we had to think outside the box. How are we going to get creative with this to keep scaling up? And once we started investing in Chatham, then we even saw more of an opportunity like, hey, these properties cash flow very well. It's only a matter of time before a lot of people start realizing this, which they have. I mean, the last couple of months in Chatham has just been crazy. So that was really our whole idea behind it was let's scale quickly, let's attract joint ventures. And now it's to the point where we have too many people that want to partner with us. And, now we're trying to rearrange our business in a sense where we can be more, where we can offload a lot more. And we're really trying to step back now. We've reached our cash flow, like what we want in cash flow. We truly have enough tenants where, it's okay to kind of step back from the business and maybe do a little more traveling, things like that. So.
Yeah, no, that's amazing. And that you guys nailed it right in the head. And that's what it is, right? Like, how could somebody trust you if you don't have something to show for it, right? Like, here is proof. Here's like my portfolio. Here, basically, it's like applying for a job, right? To look at a resume, your experience. So definitely, like for folks that are looking to expand or have that sort of scalability of attract partnership, you definitely have to have proof that you can do this pretty well, which you guys have done fantastic job on. And you mentioned you at that time you were working a full-time job as well. And at what point did you decide, you know what, I'm good, I can quit this and do this on a full-time basis?
Exactly.
I'm always curious to understand, what the psychology behind that is and how does one get to that point? So what was it for you?
I'm really glad you brought this up because it's actually it's a really unique and really funny story that truly could have gone the opposite than what it really did. So Taylor and I started investing in June of 2019.
Right.
In November of 2019, I went to school to finish my electrical apprenticeship. So I didn't have a job, quote unquote, didn't have a job, right? I was in school. I was focusing a lot more on real estate. And then we were buying a lot more real estate. And then January came along. I went back to work for 2 weeks, and then I actually ended up taking off another month. Me and my boss had a really good relationship. He, essentially just laid me off because we were slow. We were slow at work, and it was a really good opportunity for me to kind of just, focus on. We had a lot of projects on the go, so it worked out really well for the company.
Right.
And then COVID happened. Right. Basically in February, March, COVID started to happen. And then my boss was thinking, maybe let's keep everybody at home. Let's, keep everybody safe. And then we really started ramping up our real estate portfolio. There was a week where it was crazy. On the Monday, we bought a property. On the Tuesday, we bought a property. On the Wednesday, we bought a property. And then on the Thursday, we bought a property. And it was like, holy crap.
Wow.
And then the following Monday, we bought another property. It was like, what is going on right now? And then at that point, we really didn't even have remotely enough cash flow for me to justify leaving my day job. And then, obviously COVID happened. There was the lockdowns, everything like that. So I wasn't going back to work. We had to really pivot. How are we going to close on these properties? So what we ended up doing was we need to close on these things sooner than later so that I can show that quote unquote, have a day job. We had the funds to close on it. So that's what we did. We shortened up all the closings, but it was, April when my boss ended up asking me to come back to work. And I remember being at one of our projects down in Chatham, and it was just out of the blue. I was talking to him on the phone, and he said, "Hey, Jeremy, look, we need you back at work. We're starting to, get a little bit busier." And, truly without talking to Taylor or honestly anybody, I just told him, I was like, I can't come back. I'm not going to come back. I'm just going to focus on real estate full time. And then it was funny. I came home and I was talking to Taylor about it. I said, "Hey, look, what do you think about me just not going back to my day job?" And Taylor was like, "No, there's no way. You must go back." And this was before I even told her that I quit.
Right.
And then, I kind of just told her, I was like, well, I already told him I'm not coming back. So this is kind of how it's going to be. And from that point on, there's been no looking back. And the reason being is because we saw this opportunity. And this comes with any sort of opportunity where it's going to be, where it's going to be a little bit risky. There's going to be this doubt in your mind where, you're thinking about all the negatives. But for me, one of the things that I think I do very well is I always think about what's the best case scenario, or what's the likely scenario going to be coming out of this. Well, the likely scenario is, okay, maybe I don't have the cash flow right now, so I'm going to limit my expenses and I'm going to really ramp up my real estate portfolio, right? That's the best case. The worst case scenario is I go back to my day job, I don't focus on real estate, and my business just stagnates. And that's what I didn't want, right? I saw all this progression in our real estate business, and I thought, I can't stop now. There's no reason why I should stop. Life is so short. Going back to, like when, we had those family issues, right? I really saw like life is very short. And a lot of times, people are just discouraged to take that next step. But it's really important to say to yourself, what are the consequences of me not taking this step forward? Right? Now, Taylor and I are in a position where we're thinking, how can she get out of her day job? When looking back a year ago, this would have been something that we may have thought of doing, 10 years down the road, right? But because we took that next step, now we're furthering our mindset.
That's amazing. No, that's the thing. So you definitely took a leap of faith. You bet on yourself. Exactly. A lot of people don't do that, unfortunately, right? It is, we all have that fear. Oh, what if we think of the worst case scenario? Like you said, it's the majority of us are kind of, our brains are wired. And the reason for that is just because it goes back when we were, cavemans. You're stressed because your body is reacting to it to protect you for whatever it is, right? We don't have bears attacking us anymore, but we're thinking about financial reasons, for instance, right? And then there's that stress, and there's that little roadblocks that do come in. So following your journey through, social media and stuff, I see you are there grinding every single day, and it clearly is a reason why you guys are able to scale that portfolio at that pace, right?
And one of the things that I always like to tell other investors is, just realizing the situation a lot of people are in, and something that really clued into me is, when we rent out units, people say, I can only afford $900 rent, but I can't afford $1,000. And I always like to say to myself, and I've said this about a lot of different things, is, there's no way that, all of your expenses just add up where you can just afford $900. There's a lot of other factors coming in where you can afford a lot more, but you're making other life decisions where you can't afford more. So for me, what I always thought was, what's the worst case scenario? I'm just going to stop, I'm going to limit a lot of my expenses to help me with this journey, right? Because like I said, there was essentially 6 months where there was no income coming in from my side, right? We were doing a lot of renovations. A lot of money was going out month over month. So it wasn't like we could, maybe we were cash flowing $300-400 from a duplex, but that money was directly going back into the $40,000 renovation we were doing on the next duplex, right? So there was never this cash flow. So I just had to say to myself, how am I going to limit my expenses and make this work? Because maybe we have $5,000 in the bank account, but it wasn't because, everything just systematically ended up that way where, we ended up with that, right? It was because I, downgraded my expenses. I stopped, just things that I would normally do. But with COVID too, it was really interesting because when we purchased all those properties, there was a conversation that I had with my parents, and it was, they were really worried. Looking back, it was a huge risk. We bought like 5 properties when like COVID was hitting the fan, right? The world was essentially about to end. Right. And we were like, here's all of our cards. We're going all in, right? Or sorry, all of our chips, right? We were going all in at this point. And we had a joint venture on a few of these deals. And James, who's a business partner of mine. And I remember him and I talking about it because my parents were very concerned, as well as his parents were too, right? They were saying to us, guys, you should really think about what you're doing. We don't doubt you, but we want to, give you our opinions. We're really unsure with how this is all going to play out because we weren't, right? We thought COVID was going to be like, the world ending thing potentially.
Yeah.
And, a very important conversation that I had with James was, it was simply, we're willing to outwork 95% of people, if not 99% of people, but on the low end, 95% of people. And with any loss or with anybody that's losing, there's also a winner on the other side. So, and typically the winners are the people that are outworking the others, right? That's usually how it works. There's a few cases where people get lucky, but most of the time it's people who outwork the others, and that's what we were willing to do, and it's what we continue to do. We systematically, we put in a couple extra hours each day than everybody else, and that's in sense winning over everybody else, right? If the majority of people are putting in 8 hours a day and you're putting in 10, you're essentially winning because you're putting in more effort.
Yeah, no doubt about that. Yeah, no, for sure. But it's interesting you say that, because then one of the other things that a lot of us run into is it has a big impact on our relationships, right? Because you're spending all these hours working on a job per se, right? Yes, it's investing, but it's still taking time away from you, from your family, from your friends, right? So how are you guys able to manage that relationship, whether it's with your family or your girlfriend, for example? Were you both on the same page from day one? Was this something that was understood, or was it there times where you guys were like, listen, like, I'm working like crazy. I don't have any time to spend time with you. I don't get to go on vacation, right? At one point, do you draw the line to say, you know what, enough is enough, or maybe I should figure out a way to balance life? Is that ever been a concern for you guys?
Absolutely. Absolutely. So, and I'm actually really glad you brought this up, because this is something I like to talk about a lot when I'm talking to other investors. And definitely the relationship aspect is difficult. Thankfully, Taylor and I are both as mentally invested into real estate as one another. However, there's a lot of times where things get stressful. Maybe there's tenant issues. We're buying a bunch of properties. We need to figure out how we're going to come up with this money. Things do get stressful. So one of the things that we've started to do is every week we have weekly meetings. We've got our quarterly goals, we've got our yearly goals, and then we just systematically break it down. How are we going to achieve these things? So every single week we meet with each other on Saturday. We break it down. We break it down week by week. If we do everything week by week, we are going to surpass our goals. And what this has done for us is it's helped both of us keep each other accountable, because a lot of times, when issues arise, maybe the question is, who's going to deal with this, or why isn't this being dealt with, right? Because It's like, you should have dealt with this. No, you should have dealt with this. Or why isn't there another deal under contract right now? Well, that's your job. Why, Taylor, why isn't another deal under contract? That is your sole job. Or Jeremy, why are we extending closing? Because your job is to fund these deals, right? So now what we've done is we've put each other in our own seat, or each other's seats, and we have our own tasks. We've become more organized in our business, and that's really helped us with managing our relationship. But of course, right, we've been in F1 driver's seat for the last year and a half, because like I said, we wanted to scale this real estate portfolio. We have this idea where, in 2 years from now, there's going to be an opportunity where we truly never have to work again, right? And potentially our kids never have to work in their life, if that would be the route that we would so choose, let's just say. Which is, it's enticing, right? Sure. Let's work crazy hard for the next 2 years, and let's be done with this. But then comes the question of, what are we going to do in 2 years from now, right? Because, sitting on a beach for the next 40 years, I mean, right now seems really cool, but for sure it's going to get old, right? So there's going to be this never-ending journey of, I need to make more money, or I need to do more, right? I see deals come up all the time, and I'm like, I need to buy this deal. And it's like, and then I always question myself, is like, why do I need to buy this deal? Do I need to buy this deal so that I can tell everybody I now have 15 properties instead of 14? What is the real reason behind this? Because The true answer is, or at least the pre-answer is, I don't need more. We don't need more cash flow. We don't need more properties. We don't need more tenants. All of this stuff it's all it is right now at this point is a numbers game, right?
Right.
Because we have the cash flow. We could stop working tomorrow. Life is going to be okay. But why are we chasing this cycle? And it's really, the true answer is it's in our DNA, right? We're entrepreneurs. We want more. And that's been something that's been on my mind a lot more, is we need to really build this lifestyle where we understand, okay, we're going to continue growing our real estate business. We're going to keep buying deals, but how are we going to do it in a way where we can still enjoy time together? We can still have a lot of time with our friends, our family.
Yeah.
So one of the things, we've kind of been doing is we've really been trying to outsource as much as possible. Which is hard for me, right? It's hard for me to pay somebody to go put up a light fixture when I know I can just do it for, like, I can buy a light fixture for $12 and go put it up, right? But it's like, am I going to pay somebody $90? That was a hard thing to overcome. But in time, it's turning around, and then I'm realizing once I get people to do these things, it's like, this was worth it. Why? Oh, because I get to spend time with Taylor on Saturday when it's her day off.
Right.
That's worth more to me than saving $50, right? So it's just really balancing that in.
You nailed it right in the head. For me, from my lifestyle, and then just a little bit background about me, I'm a realtor and I'm a real estate investor, and I'm trying to do the podcasting, the social media. So it's very time consuming, as you know it, right? It's very demanding. The more I think about it, just to your point, it's like I don't think it's gonna stop. Like, realistically speaking, I'm like, we always itch for more. And just like you said, like, I have, properties like right now under contract and under renovations, and projects are going underway. But as a realtor, I have this problem of always looking at properties every single day, and I see deals, and I'm like, oh my God, I want to get this one. I want to get this one. It's like, it's always become like a game for me, in other words. And I'm sure you feel the same way, because you now see the value of it, that it has become so comfortable for you that you just look at it and you can analyze it within a few minutes, and you can see the returns, and it just sparks up your eyes. But then at the end of the day, it's like, what are we truly doing? We're trying to buy time, right? End of the day, that's what we really want. We're putting all these hours in right now so that one day we can get this time back, and not, trade it for money. But the fine balance is what about your youth? You're only young once too, right? Like, you don't want to be 80 years old and go sit in a nice Ferrari. It doesn't look as good as it would if you were 20 years old. You know what I mean? There's a fine line.
Yeah.
So I find that I'm struggling with that. And I think that's a very common thing between us entrepreneurs and investors, is like, we got to figure out where to draw the line. Like, so to your point, now that you're outsourcing, I'm kind of thinking the same way. I'm like, listen, I'm going to work from this day to this day. So no business, like at least once a week, no business. We need to just spend some quality time together. And our relationship is the most important thing. If we lose each other, what's all this money for? It's absolutely for nothing, right? So I'm glad that you guys are working towards that. Yeah. And I think the key thing is as you're progressing and as you're growing at that pace, you have to outsource, right? One of the books that a lot of people have read, and I recommend reading, is The 4-Hour Workweek, because that's essentially what it's all about, is trying to outsource as much as you can to get your time back.
And it's really hard to overcome, right? Because as entrepreneurs, we think to ourselves, I've worked so hard for this rental property. I've worked so hard for this business. I can't give away half of the profit to pay somebody to do it. When realistically, we should do that, because in essence, it's only going to help scale our business more and more, because the time that you're going to spend on your business isn't on the $10, $15 an hour tasks, right? Now you have somebody doing that for you. So you're going to spend your time on the, quote unquote, $100, $200 an hour tasks, right? Which is finding real estate deals, closing on these real estate deals, right? Aside from that, as a real estate investor, you shouldn't be doing a whole lot more with your time.
So tell me a little bit again about your scalability. So you did touch up on a few things. So you said you guys purchased, a bunch of properties. You had a whole bunch all under contract within like literally 1 week, which is crazy. How are you able to just scale up and get those renovation costs down and everything and get through it, right? So was it all joint ventureships, or was it yourself handling majority of that? Can you give us a little overview and so we can understand how you're able to do that? Because that's the biggest roadblock, as you said, the money, right? Like, we'd run out of funds. How are you able to manage that?
Yeah. Especially at a young age, right? When you haven't
Right.
had that time to build up maybe your savings account, your TFSA, your RSPs, or whatever you're going to use to fund your business. So after we bought our first and second duplex, we straight up had no money. Like it was really funny. We had no money. We really quickly got the itch to buy more real estate, and we got the single family property under contract. And we had, like I said, we had no money to close the deal. So we're like, okay, let's be smart and let's just ask our parents for money. So Taylor's parents ended up lending us some money. But the issue was, and then we brought it to the bank. We're like, hey, look, we're super cool investors. We have the money in our bank account. And then the bank goes, oh, these funds need to be your own funds. So that was the next issue. We're like, oh, come on, seriously, we got the money now, and now you're telling us we can't use the money. So like, and then it really just goes back to like, you got to ask questions. You got to ask, okay, you're saying no now, but how can I get you to say yes? And we just push them, right? Like, come on, there's got to be a way that yes is an outcome.
Right.
And then we finally got the answer out. Oh, hey, all our underwriter needs to see is 30 days bank history. Perfect. We're closing in 60 days. In 30 days, we're going to bring this back to you and we're all going to be good. Perfect. So that's how we closed the third one. After that, we were able to do like a perfect BRRRR refinance on it. And then we were able to purchase our fourth property. And then after that, we did another refinance on one of our duplexes. We were able to buy our fifth property. Then we did another then we did a vendor take back mortgage on our sixth property.
Tell us a little bit about that story, because that's a very interesting one, right? We know of this term, but it's very hard to close on it. I feel it's hard to get that deal across. So I would love to hear about this project or this specific story.
Oh, I love vendor take back. So we've done a few now, and every time you get them, you just like you just smile because it's like nice. Especially when you're scaling up and you're like, I know I don't have money for this to like bring to a bank, but it's like I could borrow the money and they don't care because they're in first position. So yeah, so it was our first time, and this is like I said, we purchased all these properties. I straight up didn't have a job. I did have a paycheck coming in the same week that we bought all these properties. So I knew like, hey, worst case scenario, we'll just close on all these properties like really soon. A few of them were joint ventures, so we didn't have to worry about closing on them, but a few of them were our personal properties that we were just going to hold 100%. So we had to figure out how to close on these. So yeah, so we just phoned them up. We're just like, hey man, like I really want this deal, but I don't think we can like prove the down payment. So I'm like, let's think of some creative ways. We always heard about the vendor take back mortgages. Then this was our first vendor take back mortgage. So our idea was, because for us, we have the ability to do renovations a lot cheaper than everybody else because we have it all in-house, right? We're not paying $50 an hour for contractors. Mm-hmm. We're paying $25, $35 an hour. So we can afford to pay a little bit more, right? And a lot of times I'm doing, a good majority of the work. So I can quote unquote just pretend like, it wasn't a cost or whatever, right? I can kind of factor that in to make the deal look a little bit better. So I said, let's send them two offers. Let's bring them an offer, a good offer with financing conditions, and we're just going to figure this shit out. Who knows how we're going to close on it, but we're just going to figure it out. Let's bring them then an alternative offer that's maybe 10% or 5% higher. It probably would have been 7% higher than what our first offer was. But let's do vendor take back terms. And at this point, I thought I was going to go back to my day job. So I said, let's do a really good interest rate because I understand how we're going to turn over this property. It's going to cash flow really well, which has turned out to cash flow like significantly more than we ever thought it would. And so, yeah, that's really how we negotiated with them. We're like, hey, we have this cash offer. We have this vendor take back offer. With the vendor take back offer, we're going to refinance this property in 6 months. So you're going to get all your money back out anyways in 6 months at a higher purchase price, likely higher than anybody's going to pay for it. We're going to pay you a sweet interest rate while you're holding this mortgage. And that was really the big taker or the big kicker for this seller was, she had an offer $5,000 less than us, but she probably thought to herself, hey, I can hold this for 5-6 months. These guys are going to buy me out anyways. I'm going to make interest on it over the course of the next 5-6 months anyways.
Right.
Why not? Right. I was trying to pitch that, hey, we're young investors. You're truly just helping us out. That's something we always try and push.
Right. And I think one of the biggest hurdles when you are trying to get a vendor to take back is that the sellers don't even know what that is, right? So was that something that you had to convince them or explain to them, or were they aware of that before? Did they understand how it works? Or walk us through how you were able to kind of negotiate or get that going? Because like I mentioned, a lot of people have no idea when you tell them, oh, you act like a bank. They're like, no, I don't want that.
Yeah. So it was definitely hard. You have to, I guess it really just comes down to, you have to show them that there's some sort of benefit to them doing what they're doing. Mm-hmm. And for us, it really, the benefit for them doing the vendor take back mortgage was they were arguably just going to get a higher end of the day, right? Somebody was maybe going to pay them 170. We were willing to pay them 175, right? They're just going to have to wait to get that cash. So that was really the biggest kicker.
And how many units is it in total?
So we have 34 units. We're closing on a larger multifamily building in the next couple of weeks.
Wow. And is this all in Chatham? Is that primarily where you invested?
Yeah, you can assume anything that I'm ever going to own will be in Chatham. And the reason being is because, again, when deals come across people's desks or when people find wholesale deals or whatever, I want to be first in mind. I want to be the guy that buys in Chatham, right? A lot of people, they buy in London, they buy in Chatham, they buy in Toronto, they buy in Welland. Right. They're all over the place.
Right.
But there's a select few investors, or there's a lot of investors who really just kind of niche down and they know the markets. And it's really, it puts you at an advantage, right? For a lot of times I can see deals pop up on MLS. I see the purchase price. I know as how many bedrooms is in this property.
Right.
It takes me a minute to really understand, should I even go further with this property, right? Whereas if you're kind of going all over, I don't understand what a 2-bedroom is going to rent for in Hamilton. And the reason being is because I don't invest in Hamilton. But there's a lot of investors who they'll go on realtor.ca and they'll look anywhere and everywhere for some sort of deal, which is okay. A lot of investors make a lot of money doing it this route. But for me, like I said, just kind of going back to, I don't like to be stressed out. I like to just kind of hone in, understand what's going on, and just rock at it is really how it kind of bundles down.
Yeah, no, for sure. And there's advantages to that, right? Because then you become the area expert and then you do attract the investors, right? And then there's a reason why they should be coming to you versus going on their own, right? So tell me a little bit about, what got you into Chatham in the first place? What are some of the market fundamentals? And I guess, what is the future outlook of Chatham?
Yeah, so I got interested in Chatham primarily because I knew of some investors who owned a few properties in and around. Like, they kind of own this section of Chatham where there's a bunch of fourplexes. So that really got me enticed. I was like, oh, this makes a lot of sense. You can basically buy up a whole street and you're good to go. So that's really what got me interested in Chatham. The reason we invested in Chatham, or kind of after that, was obviously because the cash flow made a lot of sense, right?
Right.
That's why we got interested in real estate investing, was because we wanted to build up enough cash flow for our business so that, I could quit my day job.
Right.
And the outlook on Chatham at this point is it's really just a stagnant city, right? There's not a whole lot happening, but it's a big enough city where there's enough economics. There's a big hospital. There's a lot of jobs. There's more jobs than what people can take on, which is really good. We understand the market a lot now. You can get really good tenants in less desirable neighborhoods, which are going to be cheaper price points. And the fundamentals just make a lot of sense. So because
I was going to say, one of the biggest things is everybody looks for is employment, right? So what are the major employers in that area? Is it just primarily hospitals? Like, what are some industries? Because I don't really know anything about Chatham, right? And I feel like a lot of listeners won't know either, right? So it's like, what attracts people to go there? Because the market fundamentals we usually look for is definitely you want some educational institutions, right? You want some hospitals, ideally, major employment, and of course, cost. The purchase price is very key, but then it's like, what are the market rents look like, and those sort of things, right? Like, what does economic development look like? Is there any future developments that are in place, right? Anything like of that nature, if you can fill us in.
Yeah. So in terms of development, I mean, there's a couple home builders that are building. Last year, Chatham had the most new home builds, I believe, that they've ever had in their existence. So that's good. There's a lot of development happening. The reason being is land is very cheap, or was very cheap. It's starting to get a little more expensive. In terms of jobs, you've got your typical, police, hospital. There's a really big hospital in Chatham, nursing homes, Integris. There's a lot of city workers actually. So Chatham in itself, so where we invest is Chatham, but then there's also Chatham Kent. So there's a lot of city workers that take or that do work for basically the broad scheme of Chatham Kent. So there's a lot of jobs that way. There's a lot of government assisted individuals as well, which is okay. And then beyond that, you've got your random stores, things like that. A lot of like contractor, like really just your broad scheme of jobs. But there's really there's a lot of agricultural too. However, we don't have any tenants that work in agricultural, so it's kind of hard to say that it's a big industry.
Right.
But when you're driving into Chatham, you're seeing greenhouses any which way you look, lots of farmland, things like that. So,
yeah. And then in terms of, so it sounds like there's a lot of blue collar jobs. That sounds like
exactly.
Right? Okay, perfect. And then since you mentioned the region, Chatham is pretty broad, right? So like, what are some good areas that you would invest in? What are some good areas to focus on?
Yeah, for sure. So we invest primarily south of the river, which is quote unquote, the less desirable areas. However, we've found tremendous luck with finding really good tenants in these less desirable areas, which is one of the things that, a lot of the big cities you're not seeing because, there's the good pocket and there's the bad pocket. Whereas in Chatham, a lot of these people are just familiar with living in, less desirable neighborhoods. And so, like I said, you're able to get really good tenants in these units at a really low price point. Really good luck with it so far. And I mean, like we've got 34 units. So at this point, it's been a scalable model, and it's really just what we're keeping at.
Yeah, that's awesome. And then two-part question here. One is, what is it like a typical rent look like, say for bachelor, for 1 bedroom, 2 bedroom, 3 bedrooms, just to get an idea. And then secondly, in that region, how do you go about, screening tenants? Maybe some best practices. That would be great as well.
Yeah. So what the rents look like? So for a bachelor, I mean, you're looking at anything under $800. For a 1 bedroom, you're looking at, $900 to $975. For a 2 bed, and these are all, in a duplex, triplex.
Right.
Obviously, when you're looking at single family, I would add, 20, 30% potentially in some sense. For a 2 bed, you're looking at, something 1,100, maybe 1,200 if it's in a desirable area with, a backyard, some parking, things like that.
Right.
And then a 3 bed, you're looking at, 13 to 1450. So that's really where we're seeing the biggest increases from 2 beds to 3 beds. I mean, you're talking, so when you're renting a 1 bedroom in Chatham, you maybe have 20 applicants, 3 people fill out the application, and maybe 1 to 2 of them are people you'd probably want to rent to. With a 2 bed, you're talking, 50 to 75 applicants. And then, you get a really good sense, or you get a really good pool of people you want to rent to.
Right.
But when you rent when you rent a 3 bedroom, it's like out of the park. Like it seems like just a crowd of people come. Like we just rented a 3 bedroom I had 100 people show up to the open house.
Wow.
And this was during COVID. And I was like, what is going on? This cannot be happening right now. Like, everybody line up and like social distance and stuff, because this is crazy. So, I mean, that's really, yeah, like I said, that's really where we're seeing the biggest increase.
Right.
I mean, from a 1 to 2, not really seeing it, but from a 2 to 3, huge. And I guess that really just comes down to, with Chatham, a lot of people don't have high paying jobs, so can't afford to hold a mortgage on a property. So there's a lot of families looking for adequate living space. And when you have these 3-bedroom units, it's attractive to a lot of people. So
yeah, wow, that's awesome. Yeah, and then again, I guess going back to my question about tenant screening, do you have some specific things you go through tenant screening to make sure you get the right profile?
Yeah. So one of the things that we do, or that we really enjoy doing, is or renting to, is young adults. So people that maybe are moving, from their parents' house into their first rental property. The reason being is we've had really good luck with, like the new renters, right? They're really excited to pay their rent on the first. Maybe like, or otherwise when, there's a 40-year-old couple who have been renting for maybe 20 years, maybe they're going to, pay a few days late here and there because they're used to the process. But yeah, we've had really good luck with that. How are we screening tenants? Typically, we want to see that they're able to afford the rent, obviously. We like to see, 3 times what the rental income is in terms of income. So if the rent's $1,000, we, on the low side of things, like to see at least $3,000 coming in. That's going to, because it's, as a responsible landlord, you want to make sure that they're going to be able to pay their rent, right? There's a lot of consequences when a tenant doesn't pay their rent and does get kicked out, right? It's not the best situation. I think a lot of tenants feel like they can just, screw a landlord over and they can move on. Whereas a lot of times, the names get passed around, especially in a small town, right? So it's really important for us to ensure that they're going to be able to pay the rent, especially when we're renting in a 3-4 unit building. We want to make sure that the tenant profiles are going to jive as best as possible. It is like one of the things that I never really thought was going to be an issue that we've really realized is an issue is when you've got a triplex or a fourplex and people living on either which wall of you. If one person likes to stay up till midnight, but the other 3 people like to sleep at 9, there's going to be issues. And it's hard to, you're talking to the one tenant and you're letting them know these issues. They don't think it's an issue because maybe they work overnights or whatever, right? So it's like when you're placing tenants, you just want to make sure the tenant profile matches up. A lot of times we're buying buildings fully tenanted, so it's hard to make those changes right away. But obviously, as we move forward, right, the ideal tenant that we're trying to place is somebody who works a day job, 8 to 4 p.m., goes home, they've got a nice puppy at home, and they're just happy to just hang out with them and, nonchalant, no parties, none of that stuff. Whereas, when we're buying these undervalued, underutilized properties, typically the landlord's not selling them because all of their tenants like to pay rent on the first or what have you, right? So we're inheriting a lot of issues. So that's, and then when you're placing new good quality tenants, that's when you're really going to see your issues arise, right? The tenant's paying top rent, but they may not be in like a top quality building at this point, right? Because it hasn't turned over fully. So that's definitely an issue. But again, we just try and like to be as transparent as possible.
And then are your properties, are they all being self-managed currently, or have you outsourced that?
Yeah, so we use just an app, Buildium. It's been really good for us. We can communicate with tenants on there. One of the things that I like is we've got our handyman on there. We've got our property. So another thing too, we've hired on somebody who helps us with property management. So he helps us lease units, and just deals with small issues here and there when they do arise. And the reason being is because we always like to pride ourselves in like top quality management, which is something that a lot of tenants can appreciate, right? Especially in, towns where, there's a lot of slumlords, things like that. People can appreciate having a good quality property manager. So we wanted to make sure that we were going to, as we scaled, keep those things in place. But yeah, we self-manage everything. We haven't yet offloaded our portfolio to a property manager at this point.
Right.
I don't see it happening in the near future. I'd like to just onboard people as we keep growing.
Yeah, I've heard of that before. I haven't personally used it myself, but yeah, it looks like it's a very good program where you can pretty much program or put everything in place. So whether you have your tenants in place, the information, can you text through it as well? I'm not too familiar with the program.
Yeah, so you can text tenants. Tenants can fill out maintenance requests, and then you can also onboard, your electrician, plumber, HVAC guy, your handyman, and then when these requests come through, you can just offload it to them. Then they can. Because the biggest thing with property management, the nice way to scale down and not utilize a lot of your time when you're managing properties is, coordinating. Hey, the plumber's going to come at 9. Are you good with this tenant? Oh, hey, plumber, tenant's not good. You got to come at 10. And then, plumber's not good for that. You're back and forth. So with Buildium, it gives them all of their information. They can contact the tenant. They can set everything up. And then once the project's done, they can complete the task with pictures, description of what happened, and then obviously you can pay them. Taylor's been like, Josh did this, and I was like, I didn't even realize that was like something that needed to be done. And then I'd go on Buildium and I'd see like, this was a task that just got assigned to him, and I didn't realize. So
that's really awesome. Yeah, so that's a great golden nugget for the folks that are looking to automate some of the property management. So far, you guys have just done BRRRs, and a majority of your stuff is buy and hold. You haven't done any flips or Airbnbs or anything like that, right? Any other investment strategies you guys using besides BRRRR?
Yeah, so we have a few Airbnbs. So at my our personal residence here, we've actually out back at our in our backyard, we have another house.
Oh,
that there's like 2 houses on the same lot. So we actually Airbnb that other house, and that pays for majority of all of our expenses.
Wow.
And then also in Chatham, we bought a triplex that we Airbnb as well. So that triplex was the one that we did the vendor take back on. And the Airbnb is, I don't know how to put it. It's phenomenal. It's blown our expectations out of the water. We bought the property for $175,000.
Right.
And it rents for, like $4,500 a month. So it's
Wow.
and that's a lot of it's to do with Airbnb. And the really cool thing about this property is one of our tenants in the building, she's retired, and she actually cleans the Airbnb for us. So it gives her, like, she's able to make some income with Airbnb.
Right.
We're also able to make a little bit more income because it's an Airbnb and not a long-term rental. We haven't really flipped yet. However, one of the properties we're working on right now was a property that we purchased anticipating to potentially flip.
Mm-hmm.
However, with the BRRRR strategy where you're able to get all of your money back out, and with our lifestyle pivoting more and more to like a cash flowing lifestyle, we try and keep as much as we can, because again, that equity is still in the property, whatever you would flip it for. And it's, at our age, being 23, 24 years old, it's not bad to keep these cash flowing assets.
Oh, for sure. No, that's awesome. Yeah, because that's something I've always been curious about as well, the Airbnb model. But it's just, the timing of the market. So are you guys finding that you're still busy during COVID, or has that been, for some, it's weird that when I ask that question, they say, we've been busy more than ever now because of COVID. So how has that impacted the Airbnb model on your end?
Yeah. So we've been operating the Airbnb in Chatham for 3 months, and we've essentially been fully booked since.
Wow.
With the odd day here and there. But I think in December, we were booked 29 to 31 days. January, we were booked 30 out of 30.
One more thing I wanted to ask you was I know when you do go with Airbnbs, the banks don't typically like that, right? So how are you guys getting away with that? Like, how are you able to purchase a property? Do you have like a lease in place, or like what's the backdoor way of doing these?
Yeah. So, the Coles notes is there's there's a mysterious person renting the unit, and mysteriously the money ends up in the account that matches the lease every single month, obviously at a reasonable rate. So if you're going to get, if you're renting out a 2-bedroom unit on Airbnb and it's renting for, market rent is $1,100, you need to have a lease that says $1,100, and there needs to be $1,100 going into the account each and every month.
Right.
That's essentially not traceable back to your own personal bank accounts. So whether that be through a PayPal, whatever the means needs to be, but it essentially just needs to not be traced back to you. They want to see the lease, and they want to see that money is going in on the first of the month, every single month. So that's the biggest thing, right? You're going to have a lease that's going to have a certain amount, and that money is going to be in that account every single month. Because there are Airbnb arbitrage companies or that will rent the unit from you and then re-rent it. So those companies are actually, they're going to pay you, if a 2-bedroom is going to rent for $1,000 on market, but they can get $2,000 a month on Airbnb, they might rent it for you for $1,400 a month. Mm-hmm. But you can show that income because you're only going to get $1,400 from that company, and they're going to keep the remainder. Right. So there's also a route to go that way. Right. There's a lot of new entrepreneurs that, maybe don't have enough capital, but they want to get into real estate investing. So they're willing to rent their units from you at a higher rate, take on that risk, and then pay you for it. And then you actually have a legal lease in place. Right. You're not controlling what they're doing after that lease is in place because they're paying rent every month. You don't really care.
That's right.
The nice thing with Airbnb is the units look phenomenal. So I guess the one question or the one concern would potentially be when you do have the appraisers walk through, just ensuring that they're not aware that it's an Airbnb. So, I mean, obviously you're not going to have on the fridge, this is the Wi-Fi password to my new Airbnb guest, or, there's not, whatever, if there's not a box of chocolates on the counter for the Airbnb guest, right?
A lot of us focus on, the whole buy and hold. Yeah, it will make you money in the long run, but it's like, how do you figure out how to do active income? And I think one of the best ways to do is definitely Airbnb. I think Airbnb cash flow is like crazy, but then there's also a component of management as well. So do you guys have systems in place for these things, or is it kind of pretty much, you're handling? Because again, it sounds to me you guys have a lot on your plate. So how are you doing all these different things at the same time?
Yeah. So the Airbnb at our personal property, we just have a cleaner that, and I mean, there's apps you can use where when somebody books, it sends a message to the cleaner and says, you need to clean this unit between this time and this time on this date. But in Chatham, again, we have that tenant who, she was looking for some opportunities to make money, and this was a really good opportunity for her. So again, I would say with each guest that checks in, probably on average, we spend 2 minutes, I would say.
Wow.
I would think so. I would think maybe 5 minutes at the most.
Right.
But I would say 2 minutes for the average guest. And then, you're going to have some guests where, we had issues where, the internet wasn't working. So obviously, these need to be fixed like urgently, right? People aren't going to Airbnb without Wi-Fi. So, I mean, obviously those guests take up a little more time, but those are just hiccups. But yeah, when things are running smoothly, I would say 2 to 5 minutes per guest. And, you're getting, at sometimes 50% more rent. So it's
absolutely
definitely worth it. And that's pure cash flow, right? That is unrealized cash flow.
It's incredible. And then for the Airbnb properties that you have, is it in like a specific region, or is it a nice neighborhood where you're getting these attractive people to come in, or it doesn't really matter? Like, how is it in Chatham?
Yeah, this particular property it's just you can see the Thames River, so it's a nice spot. I wouldn't say our Airbnb is in a desirable neighborhood. It's not in a undesirable neighborhood. It's just it's in the middle of the pack.
And then who are these people that are renting it, by the way? Like the people that are booking with you, are they contractors typically, or are they visitors? Like, I mean, it doesn't sound like it's a touristy region necessarily, right? So what is your typical guest?
Yeah, we've had like kind of just a broad scheme of people, right? We've had people that are working at the hospital. We've had people like there's a college in Chatham, and we've had people that need to just stay down for 2 weeks because their course is online. But for this 2 weeks, they need to be there at the school present.
Right.
We've had people who, they work in Toronto, but all of a sudden they need to work in Chatham for 2 days. We have people who they just want to get away. They live in Chatham and they just want to get away somewhere and they rent our place. Or they're people in Windsor. They just want to get away, right? So
for your bookings, do you find that it's kind of seasonal? There are certain months or seasons where it's higher than lower, or what does your typical monthly a rate look like?
Yeah, so I mean, with the months comes like cheaper nightly rates. Mm-hmm. However, we've found it pretty consistent in terms of how many bookings we're getting per month. Like we're getting, like I said, we're getting anywhere from like 22 to 30 nights a month out of the 31 days. So I mean, like a very good vacancy. And
yeah, wow, that's phenomenal. It's barely empty.
Yeah, I know, it was really good.
Yeah. So do you aim for minimum 2 night stay, or do you go for like a week? Because I know everybody have the different, requirements or I should say strategies.
Yeah. I mean, for us, it's kind of like a booking's a booking. We're not super greedy people where it's like, we want the most money possible. We already know we're getting, above average rent. So it's with that, we just kind of take with what we get.
Sweet. Yeah, what I want to do now, Jeremy, is jump into some numbers, if you don't mind. So let's do a case study. So tell me, I guess, one of the properties that you purchased, and if we can start off by getting the purchase price, and then go down to the whole nitty gritty and where we're sitting at right now.
Yeah. Okay. So I guess I'll do my first property that we purchased. So this was a duplex. It was on market. It was listed for $169,000. We ended up getting it for $132,000.
Okay.
And with that came 1 unit rented and 1 unit that was vacant. So when we went in there, it was our first property, we put $22,000 of renovations into it. Mm-hmm. And then we ended up getting a refinance of $195,000. So we essentially got basically all of our capital back out of the deal.
Right.
And, that property currently it rents for just over $2,000 a month plus all utilities. And, cash flows very well. It's got very, very good quality tenants in the building. And, to this date, it's a property that we're really happy to own. Again, though, this is in a neighborhood that a lot of people were turned off by, essentially just in a really crappy neighborhood. But again, we were able to attract very high quality tenants that respect the property, that have day jobs, and it's worked out very well for us.
What was the total cash you guys invested in that property again?
22,000.
So 22,000. Okay, I'm just gonna run the numbers. We'll give them. And what was the down payment on that? 20%.
20%.
So 132 and 20% of that. Okay, down payment 27,000, and then you had 22,000 as the rentals. Perfect. And what was the mortgage on that? So did you go with 30 years on that?
25 years.
25 years. Fixed rate or variable?
Fixed rate. It would have been like 2.89%.
2.89. Okay, perfect. Let's put that on 2.89. So perfect. So yeah, you knew basically, wow. So and then 195, you basically got an equity increase of about $63,000, and you said you're renting it for $2,000 per month right now.
Yeah, just over.
Okay, perfect. And are you paying for utilities, or that's also paid for by the tenants?
Yeah, so we have $100 in utilities just because the water isn't separate. Okay. And then we've got our insurance, which is just under $100 a month.
Right.
And we've got our property tax, which is just over $150 a month.
Okay. Yeah. So again, fairly barely nothing in there. Yeah. So based just on that, the numbers you've given me, you're cash flowing about $1,800 or $1,900 a month.
Mm-hmm.
Wow. That's insane. And has it appreciated over the years since you guys bought it? Like, what's the market value today?
Yeah, I would say the market value at this point is probably 220, 225.
Tell me a little bit about some failures you had. What were some failures that you faced?
It's really hard to dial down of, a failure that I've had, but, definitely in 2020, I I was 110% committed to real estate and probably like 2% committed to spending time with friends, family, and uh,
Right.
Taylor. So that's something that I've really tried to, look back on and think, there's a possibility, or there's an opportunity where I can do better in that respect. But however, again, there was a lot to gain with what we did last year. So it's hard to judge, if I was to have spent, majority of time with family and not on real estate or not on my business, would my life look a little bit differently? Is my life going to look differently in 5 years because of the sacrifices I made last year? The answer is probably yes, right? There's probably going to be a good opportunity where I'm going to have a better opportunity to spend more time with friends, family, and Taylor. And it really, with everything, right? There's always a sacrifice to something that you're going to get better of. Right.
Yep.
And that's the reason we got into real estate, was because there's this idea where it's like, hey, we can just travel and we can, spend a lot of time together.
For your deals that you got, have they all been on market, or are they off market, or are you doing a combination? How are you sourcing these deals?
A mix. Yeah. We do a lot of flyering. We do a lot. I mean, I talked to, I think I might have talked to like 6 landlords today, just about properties they have, potentially purchasing properties. So we're trying to buy a lot of larger multifamily buildings right now,
Right.
which is, it's like a whole different ball game. It's like trying to find a needle in a haystack. There's a lot of people that own large multifamily buildings, but these are not unintelligent investors, right? These are people who understand the value of their building, and they understand, where the value is going. So
Right.
that's, basically with anything large multifamily, it's going to have to be off market. But again, we've purchased, a couple properties off market as well in the small multifamily range. Tremendous deals. I mean, far better than what you're going to get on MLS, but majority of our stuff has been on MLS, and it's just patience. I mean, we've missed out probably on the last 7 offers we've put in on MLS.
Oh, wow. It's getting competitive,
again,
eh?
Yeah. I mean, not last November, but the November before,
Right.
when the market really wasn't that hot, we bid on 18 properties in October of 2019, and we missed every single one.
Wow.
So, and then then after that, right, there was like a streak where we got like the next 8 properties in a row that we put offers on. So just about sticking to your numbers, and
Yeah.
because with anything, it's probably not a good idea to think this way, but there's a lot of investors out there right now. But as soon as that one investor buys one bad deal, they're slowed down, right? It's the investors you should be worried about that are going to be competing with you steadily, are the people that are buying really good deals. And those are the people who you can compete with when you're putting in offers in. But when you're competing with somebody who's just lost out on the last 20 deals and wants to buy their first investment property, there's a very good chance they're going to pay more than you, because they are eager and they want to get into the game. But it's important to just stick with your numbers. If it doesn't make sense, there's nothing worse than getting into a property that, is negative cash flow that could sink you, right? That should be the biggest thing we should all be worried about. Like, there's an opportunity where you can go bankrupt doing this, or you can lose a lot of money.
Yeah, don't buy like real estate just for the sake of buying real estate. That's not the way to do it. You got to stick to your formula and what works, right? So when you're analyzing deals, okay, I can pay $150,000 for this property. If I pay another $100,000 or another $50,000, there goes my cash flow, right? Exactly. So I totally agree with you, and then that's a very easy thing to get into, just because the way the market is currently going, it's very hot. The inventory is significantly low, and there's so many buyers out there. It's absolutely insane. So it's easy to get caught up with the hype and think, what, if I don't pull a trigger on this, someone's going to grab it. If there was, for investors that are looking into real estate, if there was potentially, 3 books that you can recommend, what would they be?
Yeah. So the book that's really influential to me is How to Win Friends and Influence People, because I think with real estate, some of my best, connections, or, has really just been through networking. And with networking, you can talk to people, and, there's 2 ways it's going to go. They're either going to like you, or they're not going to like you, or they're going to trust you, or they're not going to trust you. So it's really important to understand how to communicate with people properly.
Right.
And that's been a book. I mean, that was like the light bulb book for me, was How to Win Friends and Influence People. One of the books that again I really like is Traction, and that's really how we're evaluating our business now, is based on Traction and their business systems. So that's been really good to us as well. And I mean, again, another book that I really like that I've read a few times is The 7 Habits of Highly Effective People, right? We want to go, and this is what we talked about earlier, right? To really succeed in life, you have to essentially just work a little bit harder than everybody else. So what that means is, every day being effective, being useful, doing something that's going to move the blocks forward. Because, a lot of people work 5 days a week, 8 hours a day, and that's it. If you can work 50 hours a week consistently, you're going to be ahead. Maybe there's going to be people that are still ahead of you, but for the mass majority of people, you're going to be ahead. And maybe that's not something you should strive for, is just to be better than everybody else, but it's going to definitely put you in a position to have an opportunity to have a more fulfilling life. Right? Because you're going to unlock a lot more opportunities than others may be given, right? You're going to potentially have more cash in the bank. Money's not everything, but when you can go on vacation 12 weeks a year instead of 4, that's going to really impact your life, right? So it's all about just kind of thinking ahead, not getting too overwhelmed, caught up in the details, and just, like I said, every day just putting, a little bit more effort forward, and moving from there.
Yeah, no, awesome. No, those are some great recommendations. I'll definitely would recommend reading those. I've read the first book you mentioned, but the other two, they're in my collection. I'm still getting through them. That's awesome. And then I know we talked a lot about, different things that the investors can do getting started. But if there was one piece of advice you can give them, what would that be?
I think if I was to get started in a market right now, I would probably, dig into all the free content that there is online. I would, if there's a market specific that you're looking for, I would probably reach out to somebody investor focused in that market, maybe pay for some coaching or some guidance, or, do some one-on-one stuff with them. Maybe you can trade your time, and you can help them up on some of their projects and really just get into their mindset. Because at this point in the game with real estate, there's a lot of noise out there, right?
Yeah.
Even for myself, sometimes I find out I'm not really sure which way I should go because there's so much things I'm seeing out there. So, and for myself, I have, at least I have some sort of guidance in my own head because I've been doing this for a little while. But, if I was to get started, I would probably try and get some clarity on the markets that you're trying to invest in. And what that looks like is probably just connecting yourself with an investor in that specific market. And
then we did talk a lot about traveling. So if you could travel anywhere, obviously we can't right now, where would it be?
So we're going to do a Thailand trip next year. And that's something that we've been looking forward to for a very long time. I also really enjoyed Costa Rica, so I want to go there for a few months. Really, as soon as COVID lifts, you're not going to see me on renovation projects. You're going to see me somewhere tropical, because that's what this has all been about, right? I mean, we're trying to build some sort of life of freedom.
I love our session. Thank you so much for joining us today. And for folks that want to connect with you, what's the best way to reach out to you?
Yeah, so I mean, definitely by email, tjrealestate@hotmail.com, or on Instagram, Jeremy Ivany. I'm super active on social media, so definitely don't hesitate to reach out for sure.
Yeah, thanks for joining us today.
Thank you so much for tuning into today's episode. I hope you were able to get some great golden nuggets out of it. The kindest thing that you can do is share this podcast across all social media to help as many people as possible. If you like this podcast or have any questions, feel free to reach out to me on Instagram or YouTube. I'll have those links in the show notes for you to contact me. I love bouncing ideas, people, and I love talking real estate. Thanks so much. I'll see you in the next episode. Remember, financial freedom is just a few properties away.